Okay. So we are going to learn the extract of balance sheet that we are asked to make after making a profit and loss appropriation account. They ask you to make a profit and loss appropriation account, a current account. Capital account will always have their balance. The opening balance will always remain the closing balance. Are you with me?
Yes.
Okay. So what we are basically going to learn is the balance sheet. How is the balance sheet separate in a partnership? Now you know that when you're making a balance sheet, your first section contains your non-current assets. Are you with me?
Yes.
Okay. In your non-current assets, what do you have? You have three columns,
All
right?
the what, miss?
You have three columns, right?
Yes.
Would have your cost, then would have your provision for depreciation, and after
Wouldn't it be
you have your
depreciation to
net
date?
value. Yes,
Wouldn't it be depreciation to date?
yeah, depreciation to date, provision for depreciation, it is the same thing. It means accumulated depreciation. Are you
Okay.
with me? You
Yes.
have your non-current asset, you get the net book value, you make a line over here, and this closes, right? Are you with me?
Yes, miss.
Then after
Yes,
your
miss.
non-current assets, what will you have? After your
Net book
non-current
value.
assets, what will you have?
Current assets.
Current assets. Do you remember the five current assets?
Yes.
What are the
Yes,
five
miss.
current assets?
Cash in hand,
Closing.
cash at bank, trade
Yeah.
receivables, other
It always
receivables.
starts with closing inventory.
Yeah.
Then
Cash.
trade
Trade receivable.
receivables. From the trade receivables, what do you deduct?
Bad debts.
New bad debts, new RDD. Yeah.
What is
Or
RDD?
PDD. Provisions or reserves. It's the same thing. Then what are your other current assets?
Cash
Cash in
at bank,
hand.
cash in
Cash at
hands.
bank.
Then you have your cash in hand. Then you have your cash at bank. And what else do you have?
Other receivables.
Other
Bills.
receivables. What are the things that will come in other receivables?
Outstanding, no, prepaid expense.
So the things that will come in your other receivables would be your prepaid expense and
Outstanding income.
outstanding income. So you have all your current assets. You'll put your current assets, then your non-current assets plus your current assets gives you your total assets. Are you with me?
Yes, miss.
This is your normal balance sheet. Are you with me?
Yes, miss.
Okay, fine. Now you will write instead of capital and liabilities, you have your section of capital and liabilities. Are you with me?
Yes.
In your capital and liabilities, if you are a partnership firm, then your total assets minus your current liabilities. This becomes what? Your net assets. What does
Miss,
it
could you
become?
repeat?
Total assets minus your current liabilities is called your net assets.
This is also the capital, right?
Yeah, net assets means the capital. You should know this form. Net assets means your capital. That means from your total assets, once you subtract all the liabilities you subtract, what is left is the money that belongs to the owners.
Won't we get non-current liability if we do this? And capital together?
Minus non-current liability. Okay.
Okay.
So from your total assets, when you subtract all your liabilities, from your total assets, when you subtract all your liabilities, what you get in your hand is called your net assets, and net assets is capital. Are you with me?
Yes.
In partnership, the only thing that is different is the net assets part, or you could say the capital part. With me?
Yes, miss.
Yes, miss.
Our capital part looks something like this. Your capital is financed by. You have two partner. One is your partner A and one is your partner B. One is the partner A, one is the partner B, and the total. Capital account, whatever is the balance, you will write it. Whatever is the balance of the capital account, you will write it and you will get this total. Are you with me?
Yes, miss.
Yes, miss.
And for the current account, now the current account can have a positive balance. Current account can also have a net debit balance. That means your current account can have a credit balance. It can also have a debit balance, but your capital account will always have a credit balance. It will always have which balance? Credit balance. But your current account could have a credit balance or debit balance. It depends. Okay. So if the current account has a positive balance, you will write the positive figure. Same credit balance, same figure. If your current account has a debit balance, okay, so then you will put this in bracket and then you will write the amount over here. I'll give you examples. Suppose capital is 100 for partner A and capital is 200 for partner B. So your total capital will become 300. Are you with me?
Yes,
Yes.
miss.
Current account. I would say partner A's current account balance is 50, which is a credit balance. That's normal. But it is 10, which is a debit balance. So I will put this in bracket and my total will become 40. So this will become 340. This is 150 over here and 190 over here. Are you with me?
Yes, miss.
Yes, miss.
Fine. So we'll just keep this in mind. So your capital and liabilities is financed by.
Okay.
What will you write? Come on, try to recall.
The partner's name.
Capital
Partner A.
account. It is financed by your capital account and it is financed by your current account. Okay. What you can do is you can use these three columns and you can write partner A, partner B, and this is your total. Okay. So capital account, say it was how much? We said 100 and 200. 100, 200, 300, and this we had get 50, 10, so this will become 40 and this becomes 340. This is one way of writing the capital. Are you with me? Are you with me?
Yes,
Yes,
miss.
miss.
What does the 340 shows? Is it the total capital?
It is the total capital. That
Okay.
means it is the capital account balance and the current account balance
Mm.
together. Other way of writing it is you will write capital and liabilities. What will you write?
Capital and
Capital
liabilities.
liabilities. Will underline it. You have three columns with you. 1, 2, and 3. You will write finance by. Capital account, you have how many partners?
2.
2 partners, A and B. So you will write 100 and 200, which is giving you a total of 300. Are you with me?
Yes, miss.
And for the current account, we will again write, I'll put 2 dots over here. I'll write A and B. 50 was the credit balance of the current account. 10 was the debit balance of the current account. So this becomes 40.
This way is much easier.
and 340. So you have two options to write it. Your main purpose is that outside should be this figure. Okay. So either you can do like this or you can do like this. This is the capital account section. Now understand one more thing. In the question, if they ask you to make extract in a partnership question, they ask you to make extract of balance sheet or the extract of the statement of financial position. So they only want this part. Okay. So what they will ask you to do is they will ask you to make a profit and loss appropriation account. So you will make a profit and loss appropriation account and they will play very smart. They will not ask you to make the current account. They will ask you instead of that, make extract of statement of financial position. So what I usually do is I keep the format like this. This is the format that I need to memorize. And for the current account, we will make the current account the way we make it. Can you tell me how you make the current account? What are the things that comes in current
Yeah.
account?
On the debit side, interest on capital comes.
First
I mean on the
drawings,
Interest on drawings.
interest on drawings.
And
On the
credit side, balance, begin down, brought down.
balance begin down would be if it is a current account balance, okay?
Yeah. And then interest on capital.
Yeah.
additional
then-
capital, right?
Additional
Profit.
capital will come in capital account.
Right.
Profit.
Salary and then profit.
Salary, commission, share of profit. Understand, current account can have debit balance also, and current account can have credit balance also. If it is a credit balance, so it is be a closing credit balance. Will appear on which side? Opposite side, debit side. So this is normal. Okay.
Miss, and how do we decide if it's a debit or a credit balance?
Depending upon which side is more.
So we check the closing balance or the balance brought down?
The closing balance. If the credit side is more, you have credit balance. Okay. If the credit side is more, you will have the credit balance. And if your debit side is more, which balance you will have? Which balance?
We'll subtract it.
If your debit side is more, your balance is a debit balance. If your credit side is more, your balance is a credit balance. Debit side is more, balance is debit balance. Credit side is more, balance is credit balance. Okay. So capital account usual balance is a credit balance. If it is a debit balance, you will have to subtract it. This is the Bible rule. What is the Bible rule? Capital account will always have which balance? It will always have credit balance. Capital account will always have credit balance. But the current account can have credit or a debit balance. So this is the only thing that is different in your extract of statement of financial position. And then you will have your non-current liabilities and current liabilities and total liabilities. Can you tell me what comes in current liabilities?
Other payables, trade payables,
Other
bank loan.
payables, trade payables, bank loan. If it is more than a year, it will be non-current liability. And
Yeah,
bank
short term.
draft. Okay. So these are the things that comes in your current liability. I'm giving you time, make your notes. Okay.